Is the Texas real estate market crashing harder than it did in 2008? If you ask a local real estate agent, they will laugh at you. They will point to the state's population growth, the lack of a state income tax, and the corporate relocations, and they will tell you that everything is fine. But on this channel, we do not read the real estate brochures. We read the raw data. And the data is flashing bright red. Right now, active housing listings in Texas have hit 123,000 statewide. That is 53% higher than normal. Texas is officially the fourth most oversupplied housing market in the entire United States. The mainstream media is focused on a soft landing, but what they are hiding from you is that in specific pockets of Texas, the landing has been catastrophic. We are seeing a market where sellers are slashing prices in a pure panic, and corporate builders are bleeding cash. While the statewide averages look manageable, peak buyers in the hardest-hit speculative neighborhoods are watching their equity evaporate, with peak-to-trough losses pushing up to 40% when you factor in extreme price cuts and the total collapse of pandemic-era bidding war premiums. Today, we are counting down 10 Texas cities where the real estate market is in a free fall. If you bought at the peak in 2022, this is the harsh reality of your equity. But if you are a buyer with cash on the sidelines, this is your 2026 hunting ground. Let us get into the data. Number 10 and 9, the South Texas Bleed, Raymondville and Zapata. Starting our list at numbers 10 and 9 are Raymondville and Zapata. These are smaller markets, but they prove that the crash is not just an urban problem. Zapata sits on the Texas-Mexico border along the Rio Grande. It used to rely heavily on fishing tourism from Falcon Lake, but the lake has struggled with critically low water levels, and the tourism money has dried up. Because of this, Zapata is projected to see a 7.2% price decline heading into 2026. Raymondville, known as the gateway to the valley, is facing an even darker reality. Zillow projects Raymondville to experience a brutal double-digit price decline heading into 2026. For a town where the median household income is around $30,000, a double-digit drop in home equity is absolutely devastating. This is not a market correcting after a boom. This is a market slowly deflating because the economic base simply cannot support the housing prices. Number 8 and 7, the Permian Basin Bust, Midland and Big Spring. At numbers 8 and 7, we head out to the isolation of West Texas to Midland and Big Spring. Midland is the absolute heart of the Permian Basin. When oil prices were skyrocketing, this city boomed harder than almost anywhere in America. Home prices spiked, and apartments that rented for $800 in Dallas were going for $2,000 a month here. But the cycle has reversed. Oil companies are running leaner operations with fewer workers due to automation. Properties that sold for $350,000 or $400,000 during the peak are now sitting on the market listed in the low $300s, and they are still taking price cuts. Big Spring is facing the exact same vicious cycle. This city is projected to see a double-digit price decline heading into 2026, putting it among the hardest-hit housing markets in the entire state. The new construction that went up during the boom is now competing directly with existing homes, dragging prices down further. If you buy here right now, you are trying to catch a falling knife. Number 6, Conroe, the oversupply trap. Number 6 is Conroe, sitting about 40 miles north of Houston along Interstate 45. Conroe was one of the fastest-growing cities in Texas, but that aggressive residential construction campaign is exactly why you should not buy a home here right now. Builders pushed massive master plan communities in every direction, and the result is a catastrophic oversupply. Inventory in the Conroe area is at levels that have not been seen in years. If you bought a home in Conroe at the peak of the market in 2021 or 2022, you are now competing against brand new homes that are being sold at or below your purchase price. Builders are desperate. They are offering rate buydowns, massive closing cost credits, and free upgraded finishes. Every single incentive a builder offers on a new home makes the resale home down the street worth less. You cannot win a price war against a desperate corporate builder. Number 5. Magnolia, the luxury wipeout. At number 5 is Magnolia, a city northwest of Houston in the Piney Woods. Magnolia was the Houston luxury overflow market. Developers pushed high-end, gated golf course communities into the forest, targeting luxury buyers who wanted out of the city. During the pandemic, speculators arrived, and prices climbed incredibly fast. Then the luxury segment completely cooled. The energy sector went through layoffs, and the tech employers tightened hiring. Today, builders in Magnolia are sitting on completed, totally empty luxury inventory. The panic is palpable. We are seeing outright price reductions of $50,000 to $100,000 on luxury new construction. Let that sink in. A $100,000 price cut just to get the liability off the builder's balance sheet. If you bought a luxury home here 2 years ago, your equity has been completely reset by the builder across the street. Number 4, Anna, the Exurb collapse. Number 4 brings us to North Texas. Anna is a city about 45 miles northeast of downtown Dallas. Anna is where the Dallas-Fort Worth new construction wave built much faster than the buyer math could support. Builders converted thousands of acres of farmland into subdivisions, assuming remote workers would tolerate the massive commute forever. When return-to-office mandates expanded, a commute from Anna to Dallas, which can easily push past an hour each way, became entirely undesirable. Now, Anna has subdivision after subdivision of finished homes sitting with builder signs on the driveways. Builders are offering rate buy-downs into the low 5% range, closing credits of $15,000 to $20,000, and outright price reductions of $30,000 to $50,000 on new construction. The inventory is just sitting. Number 3, Pecos, the 12% crash. At number 3 is Pecos, a city of 12,000 people sitting deep in the desert of West Texas. If you want to see what a genuine, violent real estate crash looks like, look at Pecos. Zillow projects Pecos to see the largest overall home price decline of any housing market in the entire state of Texas, a staggering 11.8 to 12.7% drop in a single year. During the boom, home prices here doubled and sometimes tripled. It was oil money dressed up as home equity. Today, the workers who remain are living in company-provided man camps instead of buying local real estate. Sellers who bought properties for $300,000 during the peak are now listing them for $250,000, and they are still not getting a single offer. The market has violently overcorrected, and the bottom is nowhere in sight. Number 2, Taylor and Hutto, the Speculator Bloodbath. Number 2 is a combined entry because their fates are tied together, Taylor and Hutto, sitting just northeast of Austin. In 2021, Samsung announced a massive $17 billion semiconductor facility in Taylor. The announcement was like jet fuel for the local real estate market. Speculators, flippers, and out-of-state investors flooded in, buying up land and homes, expecting tens of thousands of tech workers to arrive overnight. Then, reality hit. Samsung announced production delays. The timeline stretched out for years. But the master plan communities were already built. Today, in Taylor and Hutto, entire completed blocks of brand new homes sit completely vacant. Builders are in a total panic. In Taylor, we are seeing outright price reductions of $40,000, $50,000, and even $60,000 off base prices on new construction. When you add in the $20,000 closing credits and free solar packages, the true value of these homes is in a free fall. If you were a speculator who paid $100,000 over asking price in 2022 to win a bidding war, and now the builder is discounting the exact same house by $60,000 next door, your equity loss is easily approaching 30 to 40%. Number 1, Austin, the historic Wipeout. And finally, number 1 on our list. The tech hub of the South, and the city with the single largest home price correction of any major metro in the United States of America, Austin, Texas. From the pandemic peak to today, Austin home prices have collapsed by an astonishing 20.4%. $1 in $5 of home value has completely evaporated. On a median $500,000 home, that is over $100,000 gone. During the boom, a basic 3-bedroom house in East Austin that sold for $250,000 in 2019 was suddenly selling for $500,000 by 2022. Buyers were throwing $100,000 cash over the asking price just to secure a contract. Now, nearly half, 45%, of all listings in Austin have price cuts. Sellers are aggressively competing against each other and against a massive wave of new construction that flooded the market. When you combine the official 20.4% baseline market drop with the complete evaporation of the massive cash premiums people paid over asking price, there are thousands of recent Austin buyers who are effectively underwater by up to 40% of their total investment. A 20.4% correction from the peak is historic. The easy money is gone. The Masterclass outro, the Predator Mindset. If you own a home in one of these 10 cities and you bought at the peak, you have my sympathy. Watching your equity vanish is a brutal financial lesson. But if you are a buyer looking to relocate to Texas, this is exactly the data you need. You are no longer participating in a fair negotiation. You are capitalizing on panic. When you walk into a builder's sales office in Anna, Taylor, or Magnolia, you do not look at the listing price. You look at the completed, empty houses sitting on their lot. You demand the $50,000 price cut. You demand the rate buy down. If they say no, you walk away, because right now in Texas, the builders need you significantly more than you need them. That is what we teach on this channel. We do not sell you the glossy realtor brochure. We track the collapsing data, and we arm you with the negotiation tactics you need to protect your wealth and dominate the Texas housing market. If you want to be a predator in this market instead of prey, hit that subscribe button right now. It is completely free, and it is the best real estate insurance you can get. Drop a comment down below. Have you toured a new construction neighborhood in Texas recently and seen the empty streets? Tell me what the builders are secretly offering you. I read every single comment.